Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some altcoins today. We're going to look at the forest instead of the trees. Did a little bit of a tree outlook in the Setup Sunday video. At the end, I listed like 8 alts on the weekly cloud that looked good. There are many charts that look good on the weekly cloud on the USD pair. There were many charts that look good on the daily cloud on the USD pair. I don't care what people trade. People are asking me, what am I doing? Well, how am I positioned? Why am I positioning the way I'm positioning? So let's talk about that in today's video. You can kind of break down my viewpoint on alts into crypto and macro. Many other people have talked about this. This isn't like any groundbreaking giga chad, giga brain information here. But let's look at some charts. Let's take a look. As far as how I'm positioned, did a survey of what I own here. And, I don't have some alarms that say, oh, I need to hold this percent by this time or whatever. It's just, this is how it is right now. Looking at it, it makes sense to me. If you believe in ETH hype relative to the ETF, you're going to want to be ETH heavy. That's just the way it is. We've got a bunch of other little stuff that's tiny, right? Like less than $1,000. Okay. I don't think there's any issue starting to accumulate things that you think look good. I have no problem with that. Go for it, right? Go full hog into these coins. I don't care. It's not what I'm going to be doing until these conditions on the left are satisfied. So for crypto, that is after Bitcoin halving, that's when we do best. In altcoin land, we'll take a look at that. Stablecoin prints. I want to see stablecoins printing like Jerome Powell. Okay, I want to see just nonstop stablecoin prints. Alts do best when we have stablecoin prints. Alts do not have direct access to trillions of dollars like Bitcoin ETFs do. Alts need the lifeblood of stables. And most importantly, altcoin exchanges who don't have direct access to USD need lifeblood of stables. Otherwise, it has to come from the top 10, right? It has to come from Bitcoin or ETH. There has to be some wealth effect. Bitcoin needs to do well first, which it arguably has done. And I think that's why we're starting to see and have seen some rotations in Q4, early Q1 into other alts. But broadly, alts not doing so well. And you can measure that directly by looking at total 2 over BTC. And we'll look at that. So what would you want to see is a technical strength, technical evidence in total 2 relative to Bitcoin for me to change my Bitcoin allocation in a more significant way. Okay, this is just non-BTC positions over here. On the macro side, I talk about most of this stuff every Monday, but let's look at it directly in relation to altcoin strength, speculative strength. What are we specifically looking for? We want rates down. This is altcoins want rates down. At this point, I couldn't care less. Okay, we're doing fine. You're getting cash or yield on your cash. As long as the economy is humming, which we can debate that. It feels like it's humming. Anecdotally, Main Street here, everything is packed. All the restaurants are full. Things look okay. Things look okay. At least for the upper, middle, and upper class. They're doing okay, right? One other thing you don't want to be doing into a potential US recession is holding the highest beta, most risky, illiquid stuff, okay? That is going to get absolutely hammered if we have some risk on condition, such as a US recession. Now, globally, again, I talked about this Monday, but globally, we're seeing recessionary conditions in other countries, not so much in the US. I'll talk about what to watch for on the US side. But what are people most likely to sell first? What am I most likely to sell first? It's this stuff here. If we hit a recession, it's this stuff down here. If I need to pay taxes, I'm selling this stuff first. Okay, no question, right? I will sell this entire stack if I need to pay for something, if I owe money on something, before touching my Bitcoin stack. So I think that's broadly what most people feel like, right? Maybe they won't sell their prized NFT, but they're probably going to sell their altcoin positions. And then probably the most important piece of this would be global liquidity injections shifting from QT to QE, quantitative tightening to quantitative easing, where the Fed or global central banks are adding liquidity to their balance sheet. They're buying assets, bonds, mortgage, whatever, right? That's also something to watch for. We've got elections. I forget the percentage of GDP I don't know if it's 80% of the GDP, 50% of the planet. I don't know. There's a lot of elections this year and even into next year. And that would lead to potentially stimulatory type of stuff. Biden wants to continue to bail out student loans, continues to pump money into the economy via Infrastructure and CHIPS Act. I'd much rather spend it here on the people who live here than bombing people overseas. So that's just my opinion. But we'll take a look at that as well. So if we look at total 2, which is everything except Bitcoin, relative to Bitcoin, on the market cap side, some of the earliest data we have for this is 2014, which is honestly pretty good. There wasn't a lot of altcoin activity in 2014, and certainly even fewer alts that have survived since 2014. But what you'll notice historically, the purple line, the alt line, catches up to Bitcoin post-halving, even though Bitcoin is actually doing extremely well post-halving, right, based on market cap. And towards the very end, which is a great signal to watch for in this cycle, towards the very end, alts actually overtake, right? You can see alts briefly higher than Bitcoin here. One thing to remember in 2017, 2018, I believe Bitcoin peaked, I think it was 2017, and then ETH peaked actually like a couple weeks or a week later, right? And that's also partly what you're seeing here. But the pre-halving strength starts slightly, right? You can see Bitcoin does well, alts did well in 2016. That's kind of where we're at right now, right? Q4, Q1 into Q2, that makes sense. But alts do best after halving. So I always want to see the greatest amounts of tailwind for alts to do well. In 2020, in that halving, you can see that the alligator jaws widened out significantly, right? In 2019, alt markets got hollowed out. If I were to go on the day of the COVID panic, that was probably the maximum of the jaws, right? Between Bitcoin and alts. Post-halving, that caught up. Bitcoin still did better, okay, collectively against alts as a group. Alts finally regained that dominance as, many things are happening up here in 2021. SBF is pumping VC money directly into alts. We've got DeFi mania. We've got NFTs later on. NFTs going mainstream. Stimmies, UBI, AMC, whatever, right? Lots of stuff going on here. So as a percentage, alts doing better in the long run, but they only overtook Bitcoin towards the very end. So again, that happened post-halving. Pre-halving, nothing, right? No relative strength, no gaining on Bitcoin, and your best deal was just waiting and being patient, okay? If we look at now, what has happened with having in approximately 70, 80 days thereabouts, Bitcoin is still overtaking, on a notional dollar basis, alts, which makes sense. We have ETFs, alts do not, okay? Once the ETH ETFs get here, if they get here, which I think they will, you may have to look at total 3 instead of total 2 to get a better sense of what's going on here, because all of a sudden, ETH ETFs are directly connected to the dollar spigot, right, via ETFs. Whether or not they'll be successful is another question, but this is continuing to tell me, even on a percentage basis, total 2 versus BTC, BTC has actually recovered as a percent basis more from the bottom than total 2, which is wild, but that's where we are. And partly why that has happened is because of FTX, right? We know that FTX was selling users Bitcoin continuously, especially at the bottom. So the argument for alts is to wait until the differential is the greatest. Typically we see that into halving, right? And then to watch for alt overperformance at the very end, at the very top of the market. Usually this is because rotation, wealth effect, liquidity. We may not see that this cycle because of the ETFs. I was talking to people on the Discord saying that the ETF money is going to rotate its way into alts, the Bitcoin ETF money. Okay, now let's logically think about this. If I'm on a brokerage with my Bitcoin ETF and I'm up X percent, okay, am I going to take profits, move that USD to a bank, move that USD from the bank to an exchange, buy USDC maybe move to MetaMask or some other wallet, and then bridge to something, right? Like, it's a lot of steps to say we're going to see that money moving into alts from traditional bank accounts. I'm not saying it can't happen, but let's see what happens first. I think what's more likely to happen is the crypto wealth effect. The crypto natives are going to be rotating heavily, and that may or may not overtake alts in the long run. But again, that's just something to watch for, right? Like we may not see this alt overperformance. It may be right translated a little bit more, right? Because there might be a little bit more of a delay there. I don't know. Just something we're going to have to watch for as we go along here. Talking about stables and stablecoin prints, this is a chart I've talked about for months. It's good to see USDC picking up steam here a little bit. You know, I think, I don't know why this is, but there's this alignment of pro Coinbase, pro USDC, pro ETH DeFi people. And then there's this other cabal that's like Blockstream, Tether, Bitfinex, global USDT adoption, you know, El Salvador. You're not hearing El Salvador talk about USDC, right? This is very much a US phenomenon. So any upcoming stablecoin regulation is probably more likely to benefit USDC because they play ball legally, more so than USDT. If anything, it's going to help create a moat for USDC in the United States. We'll see. Just yesterday, they announced that they are discontinuing USDC on Tron, which is a hint that they're getting ready to be completely regulatory compliant on the up and up. If we look at what's happened to stablecoin prints post-halving, this is just Tether, okay? We're not including anything else. If we're just looking at Tether and we compare the market cap of Tether to Total 2, which has all sorts of issues, right? But this is just a thought experiment. Tether to Total 2, as far as, I guess we could call it the beta, but the growth of market cap is about 2.5 times the growth of USDT. So again, what we want to see is continuous nonstop stablecoin printing expansion. We've seen a little bit of that. We've seen growth in the altcoin market, probably because of that. But the rate of change, the growth of USDT has slowed down and has been slower comparatively to post-halving periods, right? So again, that's what we want to see in the next 12 to 18 months. So if we look at where could this liquidity be coming from, if it's not coming from the Fed, if it's not coming from most central banks globally, a lot of it hasn't come from necessarily stables, but it's come from this facility called the reverse repo facility where short-term cash gets a yield. That has been parked there for a long time to the tune of over $2 trillion, and that has been drained down from $2 trillion to under $550 billion. So this has acted as a liquidity release for risk assets that includes alts. And you can see alts certainly have benefited. Bitcoin has benefited. Whether it's directly from reverse repo to alts, probably not. It's just the general effect of more money in the ecosystem. So it doesn't always have to come from Bitcoin appreciation or stablecoin prints, but it's pretty clearly important that stablecoin prints are involved there. If we look at total 2 over BTC, pick a high time frame, add a trend metric, and you're likely to deduce that we're still quite bearish broadly looking at total 2 over BTC. What you're hoping for here is some sort of diamond bottom, which I'll get to on ETH-BTC, and or move through the cloud. What people are trying to do here is jump the gun, pick a bottom. They're getting excited. It's been down only for years. I understand that. For me, I'd rather just wait till we're at least in the cloud, you know, or ideally above the cloud on this metric. After the ETH ETFs, it's probably more appropriate to look at total 3, which to me looks even more bearish. And again, if you're heavy into alts relative to BTC, you probably don't care. Most people don't. I get it. But if you're trying to get the most bang for your buck, this is the type of chart you want to look at, because this still looks quite bearish to me. And it's basically inverse dominance, right? Dominance showing, Bitcoin dominance showing ascending triangle, total 3 over BTC showing likely descending triangle here. From a percentage perspective, in my opinion, you actually want alts to have that one final capitulation somewhere around halving. Why not, right? It gives you a better buying opportunity than here. The problem is people are already loading up, right? They're loading the boat on their entire portfolio in these alt positions, where you may be better off waiting maybe 6 months max. Maybe we get a US recession declared, maybe unemployment goes insane, right? Maybe you get some 25% off bargain deals coming. But I think being patient here is going to play off substantially when we're talking about things down the risk curve outside of the top 10. We can also look at stuff outside of the top 10. This is others relative to BTC. And I think this is why people are getting excited, right? There's clearly been a jump in the strength of the riskiest alts relative to Bitcoin. The meme stuff, the layer 2s, the DeFi stuff. I don't even know what other categories are left, but that stuff has done well broadly since July, right? I don't know where this goes from here. It doesn't look like it's strong just based on the TA, but again, something else to watch for. And then if we want to look at like the riskiest of the risky, or the frothy of the frothy, the frothiest of the frothy would be NFT volumes. This is from Hill Dobby on Dune. He is a legend in the data department for Dune, but looking at ETH NFT volumes, still down quite a bit. Now, it's tough to look at NFT volumes because there isn't one place over the past 5 years that we've had consistent data. There's airdrops, there's incentive for liquidity, there's different chains that NFTs are traded on. But even when we look at weekly traders, there's really nobody here, right? Really nobody here. Now we can separate that out between ETH and Solana. If we look on CryptoSlam, we are seeing sales pick up. People obviously in the pudgy penguins, they know that. But unique buyers and sellers still flatlined. I think we can shut that off if we just look at weekly here. All right, maybe not, but you get the point. We're not seeing a giant rise in that. We did see that in Solana a little bit in Q4, but even there, we're starting to see a drop off in NFT activity. We can also look at crypto apps in the App Store, which is another good like retail data point. This was put together by Spadefish. So thank you, Spadefish, for this. But if we go through this, even included Google Trends, remains quite low, right? Crypto apps in the App Store, still outside of anything important or relevant. In the finance category, significantly higher. But if we look at this data relative to price, relative to retail, relative to alts, to me, it doesn't give a great argument for collective alt strength in the near term. You could argue the other side of the coin. Well, Josh, I want to buy stuff when nobody's here. I want to buy stuff when there is weakness. Okay, again, that's fine. I just think we're going to see some discounted stuff here coming up in the next 6 months on the alt side of things. Back to NFTs for a second. There is a watch index that goes back quite far. Basically, almost pre-pandemic, but not really. We'll say January 2021. This thing continues to just crush lows. And this is specific speculative watches, let's just say. Okay, so even this hasn't quite turned around yet. Just another reason broadly, maybe alts aren't the move yet. Moving on to the macro side, if we look at total 2 relative to the dollar strength, which is the DXY, it's the dollar index, relative to other global currencies, mainly the euro, when does the purple line do best? Historically, post-halving, Dixie weakness. Post-halving, Dixie weakness. We're not post-halving. We certainly don't have Dixie weakness yet. Okay, but again, this is something easily to just check off the list. If I want to load the boat on alts, this is when I do it, and we're not quite there yet. Ben Cowan talks a lot about this, rates relative to total 2. Historically, alts do best in ZERP environments. I don't think we're going back to ZERP. Something like ARK, Cathie Wood, that did best in ZERP environments. The riskiest of the risky stuff is always going to do best when there isn't a competitor for a risk-off vehicle, right? Right now, there's a competitor. There's 5% on cash, 5.25% on cash. Even when people are taking profit in ZERP, there's less of an incentive to move to pure cash because there's no yield there, right? When there is yield on cash, people are less likely to search for risky stuff, right? There's just no need. There's no need. That's my opinion maybe, but I think that's psychologically makes sense. So again, rates still quite high, rates not coming down yet. And COVID was maybe like the perfect storm for this because not only did rates come down basically immediately to zero, but that was also Bitcoin halving. That was also liquidity injections. And we also had a recession all at that same time, right? It's like we snapped the rubber band and everything perfectly aligned in that one time point and off it went. So we're not quite there yet, right? We're not quite there yet. As far as looking for a recession, I talk about this on Mondays a lot, but this is the yield curve. I'm not going to go into it. We're still inverted on the yield curve. Recession in the green highlights here, that comes after the uninversion. So I really, really, really do not want to be heavily denominated in alts with unemployment rising and the yield curve uninverting. Okay. What is likely to happen in that period is the riskiest of the risky stuff declining significantly. I could be wrong this go around. Hey, look, maybe the debt, it doesn't matter. Maybe the stimulatory effects we might see will overcome recessionary effects, but I don't think alts are recession proof is what I'm trying to say. Most people would agree that this is a pretty good metric for trying to time a recession. So the clock is ticking, but we are not there yet. Okay, we're just not there yet, which is another reason, like, look, alts could do well. Alts could continue to do well. But the moment we get recessionary type environment, watch out. The floor is going to fall out from under you. This probably belongs more in the crypto section, but I think Tom Lee was the first one to look at this. If you look at the past 90 days, the past three quarters, 3 quarters on alt returns relative to BTC, you start to see these patterns of excessive speculation versus alts just losing dramatically relative to Bitcoin. So I think what we will see coming up here with the potential recession call would be alts dipping to this extremely poor performance relative to Bitcoin. And I think that's the best time to load the boat. And I mean, you can match this up with price and see what's going on, but I think the macro headwinds are still too much yet to overcome. And we can look at Fed balance sheet. We can look at global balance sheets. These are all coming down. This is not the reverse repo. This does not include the reverse repo, but again, something to watch for. Alts are going to do best when liquidity conditions are best. We talked about reverse repo. That still has a little bit left, but that liquidity has certainly helped alts. In the final moments here, we'll talk about really just ETH and Sol. I'm not super concerned about anything else in the moment. ETH has developed this kind of ugly pseudo megaphone ascending triangle thing. It's really hard to get positioned for stuff like this because if you're expecting a breakout after a move like this, you're kind of setting yourself up potentially for a pretty heavy reversal first. So I like the daily Kijun 2500. Right now, everything's kind of pulling back, waiting for NVIDIA earnings. Still looks bullish. No question about that there. We were also talking in the Discord this week about my ETH target of 10K and how that's potentially too bearish. One way to think about this is historically, when has ETH topped relative to the Bitcoin halving? If we look at that in the past 2 halvings, ETH has topped out approximately 540 days after halving. If we project that, this is just a guess, right? We pop on the pitchfork, we get a rate of change. We look at 540 days after halving. That's approximately October 20th, 2025, which doesn't really make a lot of sense. This would probably run to January, the tax day or the tax deadline effectively for capital gains. But in any event, one way to use this as a framework would be, okay, what makes the most sense here? If this rate of change continues, the midpoint would be 20. That makes the most sense. 50 is unlikely. I don't think, that's the highest, that's the top end. The bottom end of this is closer to my target around 8. That isn't to say somewhere in between we can't find a top, but historically it's happened about 540 days after Bitcoin's halving. You can also look at the rainbow chart for this. So look, maybe I am too bearish, but I think the easy call is 10K. Can it go to 20? Absolutely. 20 by October 20th, 2025. Look, if Bitcoin's at 300K, yeah, send it, send it to 60. I don't care. But the ratio may be more important than the USD value. The other thing that's obviously important is when that happens. Does Bitcoin go to 300 first and then ETH plays catch up? Or does the ratio effectively lock in somewhere between 05 and 06? When I say 20 or 50, people are thinking, oh, okay, let me load the boat right now. But if you're honest with yourself and you're trading around the ratio and understanding there will be a give and take there, this may or may not be the best time to be loading the boat on ETH generally, right? Now we can look at the ratio and say it's still below the weekly cloud, Okay, so broadly bearish, still below the 200-day moving average, this green line here, still potentially setting itself up for a move below 04. People think I'm crazy. That's fine. Until this is above the weekly cloud, or at least in the weekly cloud, it's hard to be bullish on this thing on a high time frame. On a low time frame, we could set this up so beautifully on technicals to the point where we could see a significant move on a low time frame. Okay, let's paint the picture here. Let's say, all right, we've bottomed. We've returned to the 2022 low. Perfect. Okay. Not only that, but we are hyper volatile down here. One thing you'll notice about tops and bottoms generally is that you see a lot of volatility. Buyers and sellers come into an equilibrium, right? Yes, there's ETF events. Yes, there's this other stuff. But if we're just purely looking at TA, we could be painting a diamond bottom down here. How this works is you just, you expand the volatility and then the volatility contracts, forming this diamond shape. That volatility contraction could lead us to post-halving, could lead us to pre-ETH ETF approvals, okay? And potentially, this diamond point is where you'd want to be the most heavily denominated in ETH. It's a massive make it or break it moment, but the expectation is because of the event, this would be positive. I don't think you want to hold ETH past the ETH ETF approval dates because much like Bitcoin, ETH will get dumped on the market. I don't think the inflows will match those outflows. Okay, that's just my opinion, at least initially. So I think the ETH ETF, ETH conversion related outflows will be significantly more bearish than it was for Bitcoin on the GBTC side, and it was pretty bearish for Bitcoin on the GBTC side. So we could see a spike potentially. This measures to like 0.7. Could you imagine how euphoric the ETH people would get? This aligns with BPVR, this aligns with yearly pivot. So this would be the trade to watch for, I think, next quarter, into next quarter. This could break early. That's fine. But I think I want to wait and see what happens here on the ETH BTC side. Here are the dates for the ETH ETFs, by the way. The reason people are thinking May is because the final deadlines for 4 of these is in May. One other thing they could do is deny all of these and wait until the BlackRock final deadline in August. Whether or not they're staked, I don't know. Whether or not they're going to approve staking, I don't know. Where would staking occur? Maybe Coinbase. Otherwise, I don't know. If these get denied, they would have to reapply. If they all get denied, maybe they go back to court like they did with GBTC. I think that's the least likely. So I do think these get approved. If BlackRock pulls out for any reason, it's over. Okay. As long as BlackRock is in the game, these are likely to get approved. If BlackRock decides they want staking, we have staking. Okay. BlackRock is the 4th branch of the government. They will get it done, but they are the most important ETF on this list by far. So even if you get a string of denials, that August 7th date is still the most important. Sol, real quick. On the daily, I talked about this cup and handle on setup Sunday. It's looking potentially like that's the case. 100 is a pretty big psychological level. I think you might have some FTX selling here still. Potentially they're selling like locked Sol at a discount or something here. And we're seeing that play out with the Sol ETH pair, which has basically just been straight down, right? This makes sense again relative to the ETH ETF stuff, but someone's clearly sitting on this a little harder than they have been. And you're seeing that play out in relative strength. This is a massive Adam and Eve. This is very bearish. It's below the yearly pivot, soon to be below the daily cloud. And you can see how we reacted to finally being above the daily cloud. So I certainly don't expect Sol strength relative to ETH based on how this trend metric looks. Last thing, I'll mention Filecoin because I know a lot of people have identified me with the Filecoin community. Any chart that looks like this looks great. I think you start to accumulate. I don't think you go crazy with it. This is a complex inverted head and shoulders. This is an Adam and Eve over and over again. All sorts of reasons this looks good. Okay. Does this go to 30, 60, 120? No clue. Don't care. I just don't care. I'm just trading this based on technicals. Don't think you're pre-rich because you're pricing in what 120 Filecoin would be. But this, of any time in the past 3 years, would be a time to get bullish on something that looks like this. Lastly, I'll just mention there's a TA panel that I'll be on tomorrow. It's a Real Vision virtual conference. It's free. You can sign up. Put the link in the description. And you can see me talking about TA. See, I don't know exactly what we're going to be talking about, but charts. So tune in for that one. That's all I have for this one. Like, dislike, comment, share, subscribe. By the way, that's 2 p.m. EST, I think. Yeah. And it'll probably be recorded somewhere online. And happy trading.